Okay. My suddenly finicky Adobe Connect platform didn't want to connect, but we are connected now. Welcome. It is Wednesday. It's time for Wednesday's morning market tour, the planner session. We're going to look at what's happened overnight, connect that to what's been happening, any setups that are developing that might develop as we get into the open, which we'll be meeting back here at 9:15 to update 15 minutes before the open. More of a tactical session at that point because we'll have that information. Okay, so I'm getting kind of an error message here, but let me know if you're having any difficulty whatsoever seeing charts or hearing me right now. I mean, just a confirmation that you do hear me. Can't really confirm that you don't. But I'm going to keep going. The session that we're looking at, we didn't even discuss this yesterday, the session long aspect that did not even contain a single counter trend window, which is interesting, having trended up. Really a sideways session, so not a great setup for a session long, which nevertheless went on to a session long. The shortfall, I suppose, fall is the wrong word, but the shortfall being just that usually a session long decline session will have one counter trend window, and there wasn't yesterday. So there's a lot of pessimism. That just adds to the degree of pessimism. This late bounce here, that's not last minute. That's post-close. The cash session closed down here at the next lower 4092 target. 4092 being a target of the proxy gap, just along the Fibonacci scheme of the proxy for the gap back to, back to Monday's cash session close. And also for the headline reaction. Headline reactions, when they retrace 38.2%, which this did, and I should say only 38.2 before they extend to a lower low. If that then goes on to a lower low, that tends to then go on to an even lower low, a precise lower low. This is a little off. It should be 4092. And by the way, and that makes this next lower 4086. 4092, if that's not rejected, or until it is, back above 4112 on through a timing window. It's been probed overnight, but it hasn't actually been exceeded through the open. If we don't open or exit the open above 4112, that whole bounce just becomes refueling for the next lower extensions 40 of the selling pressure that's already been locked and loaded. 4012 or 4112 reverses to 4086. 4086, if not rejected, and after that refueling becomes difficult to reflect, or to becomes difficult to absorb, extends to 4077. 4066. So, pretty important that the open have already recovered before the open, already begin recovering the slipping away. And really, even if the open is already recovering 4112, by the time we get to the open, we really need to be seeing something more substantial than that. Because the bigger ring here is not just to avoid melting down further, or extending, I should say. We'll see about melting down, but extending yesterday's decline. Not just avoiding that signal that we're going to be extending yesterday's decline, but also signaling in its place, literally by, not by default, but literally by replacing that signal with a bullish signal. We can't be assured of rallying just because sellers aren't confirming that they still maintain momentum. So in order to isolate yesterday's probe, the open needs not only to have already started recovering 41.12, yesterday's high, but the bias up target, and preferably 41.22, which, remember yesterday, that was our next target under 41.42. When the open, even pre-open, when the so many hours had elapsed for the first time in weeks, where 41.42 had been serving as resistance, as opposed to its probes being isolated quickly. That gave us an early clue this was not your father's test of 41.42. And it did break lower. It did extend to its 41.22. And the reason why I keep just not letting go of the potential to recover 41.22 is because we were testing 41.22 in a window that really had that opportunity to reject already 41.22, but for a headline. The headline hit the market at a very vulnerable spot. It was the First Republic headline announcing their basically hopes were being dashed. Asset sale coming, the stock ended down 50%. But the point was that the market was at a point where it might have recovered. I mean, there's what it looked like on a intraday. Already short into it, bounce limits holding, nice opportunities to scale in. But that could have been a low. RSIs were not oversold into each of those lows, not until that headline took control for the rest of the day. So if but for that artificial catalyst, that's what a headline is, we would have been bottoming. We could have had a window in a session-long decline that was counter-trend, that did start to attract buyers, bottom fishers. Maybe that's delayed. But bottom line, and then we'll move on, and that is if the open is not already exhibiting those conditions where it's actually already recovering anything of relevance, and we are going to probe lower. And those are the objectives for probing lower, and then there is still an opportunity. There's always an opportunity to reject it. A diminishing opportunity, to be sure. That would be an opening thrust that lets the intraday crowd today retest yesterday's lows and through the first 15 minutes and then the first hour, 2 checkpoints that could tell us that has been absorbed, trapping post-open sellers, overnight sellers as well, so they can fuel an up leg. But those are the two paths up. One of them, if we don't start seeing it soon, we won't. The other one we'll know at the open or through the open. And if we haven't seen that, then at least this morning has the road wide open, the downside road wide open to it. And we'll have levels and setups as we get to the open. So meet back here at 9:15 for the pre-open update. Just looking at how other markets are absorbing this. So the euro, we've been tracking this pattern. This is the euro's high a couple weeks ago, pullback and consolidation. And that interim consolidation is an extended narrowing range. And extended narrowing ranges tend to break falsely before reversing. Whether that is a reversal, a retracement to tag up and then resume the original breakout, as this line would portray, or to reverse more substantially in the opposite direction. So that alone, that setup alone, playing out, there's the false break back into the range. That still leaves us with kind of a Schrodinger's pattern. We don't know yet. Box isn't opened. Is this breakout attempt still alive, or are we too late? So one thing that can help to clarify that in anticipation is this would have been already, we've been able to pronounce this as bearish, had the false breakout first produced a fresh high. We would then be looking at a double top, clean double top, reversal back into the range. We'd have been anticipating the double top to fail and reverse more substantially to the downside. But in this particular pattern, because of that interim consolidation, the lower high is not a typical double top. This extended interim consolidation, the shallowness of it, reflects a lot of pessimism. And typically, we're going to see more optimism in a double top in that interim bounce or that interim consolidation. So, because we didn't, there's an opportunity for this a better opportunity for this to tag up and resume the rally. So, giving that a benefit of the doubt to a degree, close under yesterday's low, and nope, that is reversing down. Otherwise, this is what we've been anticipating. Nice to see it developing overnight, but it still has to continue producing. We've been describing that setup for several days. So now we get to see pretty soon, should be today, whether it played out. Silver, potential for that to have been a false break yesterday, clinging to its support, actually closing above 24.75 support. Hasn't really been productive with that yet. Gold as well, not really triggering anything, not really doing anything, wasn't triggering or trying to trigger anything to the downside that's even being rejected. So nothing really interesting there. The long bond, if anything, is rejecting all these false starts that were productive, the last of them being last week, and that one being pretty much a last line in the sand to be productive for a deeper pullback. We don't know if this is reloading for another attempt. We're not looking for a new rally leg at this point. But again, long bond just not a great setup at this moment. And then crude oil retesting, not necessarily make or break support, but if this support doesn't restart the rally, at least for a higher high, targeting 87.25, which is triggered by a close above 79.55. Didn't happen. Are we reloading? Still need to close above 79.55. Or because this pullback limit isn't holding, if it isn't holding, are we extending down to actually fill the gap? That's the next attraction. The actual objective back down to 74.25, 74.35. And then quick look at crypto. By the way, here's that First Republic performance yesterday. Interesting objectives down here. I wouldn't begin to try and catch that falling knife, but there was nothing bullish about the entry. Bitcoin. So a couple days ago, we were looking at, a couple mornings ago, we were looking at coming out of the weekend with these bounce limits having been tested over the weekend and reacted down and needing one more lower low, however brief or deep it might be. It had more potential but didn't have to extend before instead breaking back above 27.8, 27.750. That would have been credible for extending higher. Yesterday we were looking at this in time to have seen its reaction down from first testing it. And that has gone on to be very productive. So this leg is no longer available, and the recovery is underway from whatever level, whether it were this pattern or this brief lower low into a little sweet spot of support. Unnecessary would have been little extra buying pressure trapped shorts. But right now we're just looking at the anticipated eventual outcome in any case, and that is that we're heading back into the highs. It gets a benefit of the doubt for actually resuming the rally. Not necessarily this leg, but now the next big test will be the coincidence of downtrending resistance. So the target area being a test of 29.5. Still need to get out above 30 to indicate that this entire pullback, the whole regime backing and filling, now basically showing that sellers are done. We start probing higher. Like to see a little more complexity to this recovery than this sudden explosion of optimism, or we'll run out of buying pressure just when it's needed most. So try and keep little restrained optimism in this chart before taking on 30,000. But that's the stage of Bitcoin, and just confirming that with Ethereum. Bitcoin having taken on leadership. Ethereum was starting to lead on the downside, but it has now followed along with Bitcoin, and they're in tandem after getting into lockstep on the way down, and then Ethereum, as I just said, taking over. So everything's credible there. Just need a 24-hour window spent above 28,000. All right, that's it. Let's see, we've got durable goods this morning, right? Several economic reports at 8:30, but that's the lead. And I think that's the only reliably influential report. Not that any others can't be inhibitive. And the first 60 to 90 seconds of any known report or announcement being weak-handed sponsorship, irrelevant, price action, noise. But that's really it. And then, of course, some post-close earnings that might inhibit price action. Especially this. We had favorable, we had beats, really, on Google and Microsoft, and here we are. So, ahead of this afternoon's Facebook, for instance, even if anticipating a favorable earnings, we're still going to see the market take a pause, because the major participants, are exposed to the reaction to earnings. But the earnings from any of these stocks does not dictate the market, other than to dictate the participants being able to pay attention to it and act. All right, any questions, please ask. Meanwhile, that's it for now, and meet back here at 9:15. Good luck today. right, good morning. The recording's not going, hang on. Bear with me, the recording is not starting up. We're going to have to redo that. All right, there we go. So good morning again. There was a probe under yesterday's low overnight. There's no complexity to it. What I mean is it's a singular leg. It's not ongoing segments that pause, refresh, and extend. So that does not require retest intraday. It is possible still that we come out of the open back above 41.12. 41.12 is a big line in the sand at 9:45. That's at least going to need to be rewarded to some degree. Maybe just to get to 22, not to actually form a durable bottom. Extending through 41.12 and by 10:15, so a long time to go, an hour from now, to have recovered 41.22 and on, that would be pretty bullish for the rest of the day. At least for its resolution, notwithstanding some intraday pullback. None of which really matters right now. What matters right now is if the open can exploit this turn. Just think of a ricochet gathering speed. If that doesn't do anything of what I just described, holds 41.12 even if it tests it, but more importantly starts coming out of the opening 15 minutes back. In this case, it looks like we'll fine-tune this as we get to the open, but it looks like back under 98.50. Back under 98.50 is the nearest line in the sand at the moment. Not that I would necessarily wait for a sell for taking on a short there, but if any kind of short we're taking on before this is what it needs to do, is get under 40.98.50 through the first 15 minutes to even begin suggesting that this whole bounce from the overnight low has just been a correction and it's about to be duplicated post-open and maybe even extended. So that's 40.98.50 below. Got to actually recover 41.12. Remember, any one of these tests is going to be vulnerable to not exceeding its 4-minute high. It could be probed for 4 minutes. And often they will be probed for 4 minutes and then totally rejected, as if that was just one big rubber band stretch. So whatever the 4-minute high is, that'll need to be exceeded as well, just to keep getting increasingly bullish or bearish on either signal. All right, so any questions about any of that, please ask. I'll be right back. All right, so we've got my line in the sand here. It's the inflection. It is separate from the green lines, the two green lines being the bias up parameters. These two red lines being the bias down parameters. They're relevant. They are influential. They are resistance and supports based on price action patterns that had developed as of yesterday's close. You can see some kind of influence. I wouldn't put a bet on, place a bet based on this, but not until 10:15. At 10:15, this is the bias signal. The internal red and green lines are the signals. And exceeding the bias up at 10:15 would have put into play a test of the bias up target. Exceeding the bias down signal at 10:15 would put into play a test of the bias down target. Did I say bias down? Bias up target, bias down target? Let the screen talk. Anyway, if the bias up signal, which is now being tested, we're now testing the bias up signal, overlapping it. If it is not recovered, now having tested it, by the way, post-open, could have been tested all it wanted to be overnight. Now having tested it post-open, if it doesn't trigger, it will put into play an offsetting test of the bias down signal. It's like a target. So there's that. That's a 10:15. So as far as the spike down, the overnight spike down, why it doesn't have to be retested, and good question. First of all, I don't consider that a spike. To me, a spike is going to be more like this price action. You see the big outsized bar. This is more of a spike actually leading into that, but that big outsized bar on the way down at 4101 is still above prior lows. So by the time we get to testing prior lows, the spike, the big outsized bars are all done. Also, there's no complexity. There's no complexity down here. There's just a bunch of cumulative down bars, sure, but there's no pause that bounces with any discernible reaction or retracement of any of the down bars before extending down. So that's a singular leg. I don't, and what it comes down to is then why, as soon as I can classify that as not being a spike, at least exclude it by process of elimination from being, or not being a spike, but being complex. As long as there's no complexity down there, I classify it as just a retest. So it's only a retest of the prior low. That is the retest, in other words. So that's why I don't need it to be retested. At this point, if the retest is retested, that is the pre-open low, if that's retested, we're not retesting, we're breaking. Now there's another layer of importance to that, and that is, since this is a pre-open construct, the first 15 minutes is the handoff from the overnight to the intraday. So if any part of the overnight is going to be influential to the intraday, if it's going to inform any post-open pattern, if any of the turns, retracements, any price action whatsoever that's derived from the overnight, if it's going to have any impact on an intraday pattern, we're going to see it during the first 15 minutes. And if we haven't seen it by then, it doesn't. Maybe later in the last 15 minutes during the handoff from the intraday to the overnight. But these sponsors, this is the very real product of mass psychology, a herd mentality, and the sponsorship. Now, as we get closer to the open, there's a blend, and that's why we've got that 15 minutes. But as we get closer to the open, these people are going to sleep or dinner. I'm not going to judge. So, if the point being, if the pre-open dip is retested post-open during the first 15 minutes, then that might be able to be isolated as just a retest. But we've already retested yesterday's late low. If we make it through the open without retesting it and then retest it, it's because it's breaking lower. That's the point or the basis behind the opening thrust. Let me just find the... That's the basis behind the opening thrust setup. An early test of, in this case, support, the first 15 minutes, really. If the first 15 minutes can test a support, which in this case is the pivotal low. The low prior to the actual low is actually a much more relevant price point in my work. And it is being at least pierced. Not even post-open. Not a really big test. We're not really, in other words, expressing a lot of pessimism. The point of the setup being to trap those pessimists, or in reverse, basically to prove that those pessimists are late money by their being trapped. They're not attracting reinforcements. In any case, get some aggressive selling pressure. All I see is patient sellers right now. Patient sellers are not weak hands. Tough to trap patient sellers, strong hands. That would be the opening thrust if we could get some pretty aggressive selling pressure just during the first 15 minutes. And then the next two checkpoints, 10 o'clock and or 10:30, recovering that first 15-minute range. That would isolate those shorts, or in reverse, tell us those shorts, those sellers are weak hands, couldn't attract reinforcements. It's like a bell going off. But again, I don't see that setup here. The retest of the pivotal low, the low prior to the actual low yesterday, developed pre-open. It was only several minutes before the open, so the intraday crowd is certainly aware of it, monitoring it as the open comes into view, but then just a sentiment extreme. So, nothing that says buy this dip. So there's a little dip here that's just not significant enough to trap anything, and it's even as late as it is, 9:45, that clock is ticking down more consistently than price is doing anything. And there's no time to actually probe any lower and recover enough to reflect isolating sellers. So sellers are being patient. Buyers are not not doing anything to characterize reserved pessimism, I would say. All just letters and syllables until we actually get to 9:45 and establish that A, buyers aren't being productive, and B, sellers are not letting themselves be trapped. I saw an earlier story. Let's see which way this is leaning. Trying to line up buyers, I know that. All right, that would be pretty. Which way is the FRC news going to go? That's really the kind of thing that that the market, that any kind of upside really is looking for, is a paradigm shift, some sort of artificial catalyst. Nothing internally. It's vulnerable, just as at yesterday's stretch down to the 41.22 target. There hadn't been any bottoming yet when the headlines hit a vulnerable market, and we're able to exaggerate or exacerbate. Well, exaggerate the reaction maybe, but exacerbate it, drag it out. The market is similarly vulnerable right now. All right, so let's label a couple things here. We've got a sell signal being probed. It's been probed for 4 minutes. We know the 4-minute low, anything under 40.95, we're going to assume is reinforcements. Almost anything. An errant tick, piercing it. If it's not a minimum 4 ticks probing 40.95, we're not even going to assume that it's anything more than overlapping. But there's the sell signal being tested. Its first 4-minute low is 40.95, so we know that anything lower is reinforcements. And if they are reinforcements, they should behave as if they are reinforcements and be pretty productive pretty aggressively. Slow playing a probe under 40.95 would be suspicious. Meanwhile, while waiting for the 4-minute low, there's room or time for 4 minutes of counter trend detouring. There's the 4-minute clock starting. There's the 4 minutes then on the first 4-minute probe, minimum 4-tick probe. All 4 minutes don't need to be spent probing above or below the inflection point. Once the clock starts ticking, there we are. So if giving sellers a benefit of the doubt already, stop should be placed, reflecting your own risk tolerance. I wouldn't want to be any closer than this inflection to the most recent high. Even a 61.8 is a candidate. So 41.2, going to leave a little bit of room for noise. This is the 4th minute, counter trend detouring. So let's look at the potential for this to actually develop into having just been noise. I am lowering the buy signal to 41.06. Could be closer than this. We could be 5.25. Would be mathematically correct in this, but I think if 5.25 is pierced, we're probably going to touch 41.06. May as well get whipsawed out of 41.0525 basis instead of 6. Now, there's no requirement for any kind of velocity up or down, confirming or rejecting. Just need patience. When a signal is immediately productive, you can expect it to be satisfied sooner rather than later. There's very rare exception. There are exceptions. They're just rare. So doing this as a business, that's what we focus on. You can enable the live caption on Google Chrome. I would love to see the instructions for that. Is that just a Chrome feature, or is that something specific to Adobe? They did not tell me about it. Oh, the latency. Okay. I mean, I would tend to agree either way. Kind of looks like an inverted head and shoulders. It's not an inverted head and shoulders. Doesn't mean it can't put in some of the properties, but I'm not going to use measurements from it. The range is, of course, going to be relevant. The swing in its entirety. The only thing we know for sure at this moment is that the bias up signal, the only input we have is the bias up signal having been tested post-open. Either triggers and puts into play its bias up target or doesn't trigger at 10:15, puts into play an offsetting test of its bias down signal. That's the only new information from price action. As it happens, yesterday afternoon's headline reaction and I mean, if you're in here on the free stream, the 2-day free stream, you weren't here for the afternoon when the headline reaction developed. So here's the math on that setup. So there's the headline reaction. We're looking for 41.22 under 42. We get there, fluctuate around it, have some nice add-ons, 3-minute tests of the bounce limit. And by the time we get to the end of the 3 minutes, we're sitting right there where we know it's wrong to be short. A great risk to reward to add all 3 times. And then comes the news, right in front of a very vulnerable market. Very orderly decline. That wasn't going to bottom immediately if it even tried to bottom here at all. But this is what the headline broke. This is where the headline got to. And there's its 38.2 reaction. It's a little bit off. So, once a headline reacts by at least 38.2%, retraces 38.2% of the reaction itself, if from that point on it either goes on to the 61.8 or extends to a fresh low, or flatlines forever. That hasn't happened yet. In this case, it reversed down to a fresh low after only touching the 38.2. And this could have extended down and never have even touched a 38.2 retracement. I've never seen that. Eventually they do, but in this case it didn't. So having reacted down from only retracing 38.2, said we're likely heading for the 38.2 projection or minimum, but probably heading to the 61.8. So that's been satisfied. So at this point, there's no bearish reason to retrace the 61.8. The 61.8 could have been used for refueling, and that would have opened up a whole nother, it's not an actual word, but a whole simultaneously effective Fibonacci scheme. 41.12 has been retested overnight. It hasn't been recovered through a relevant window. Exit a window above 41.12 and we're probably at a bottom of some sort, whatever it looks like. Sellers are done. Until then, they're not. So that scheme persists. That scheme persists, and there are other potential targets. It just so happens that, as I described, at 40.85, 85.86 isn't alone. There are other swings, other projections coordinated in the same area, clustered in the same area. So it's going to be something relevant if that's even tested, and that's the likely next attraction. And it needs to be exceeded through 10:15 to put into play the next lower. But I'm not seeing anything accumulative here in price action through the first 15 minutes. The second 15 minutes contains a fresh low. It's nominal, but it is a fresh low. I don't know that I'd base a trade on it, but just to try and assume whether buyers or sellers are making a move and failing at that move, if they made it at all. Here's the first 15-minute range. Here's the probe in the second 15 minutes. And at 10 o'clock, what did it do? Versus that first 15-minute range, it tried to retrace 61.8. If we get rid of the sentiment extreme up here, in fact, it did retrace 61.8, barely. Not at 10 o'clock, leading into it. So it's not enough to get bullish right now. It's enough that it wouldn't undermine a buy signal if one were to trigger based on its own separate formation, but this is not a buy signal, the setup that I just described. It can be. If we were to see, or we were to have seen the second 15 minutes probing under the first 15, but end those second 15 minutes at 10 o'clock, retracing at least 61.8% of the first 15-minute range, and then some. Probably that's a ricochet. Momentum reversing down. Or momentum trying to reverse down, getting trapped. And snapping back up. All right, so we had durable goods before the open. Several economic reports at 10. They're done. They're going to be influential, even if they're not influential as in high profile. They're still going to inhibit price action in case of a surprise. State Street Investor Confidence Index is not going to be an influential economic report. But in any case, it's done. It's behind us. There's an 11 o'clock report, nowhere near here. When it's a scheduled economic report, the first 60 to 90 seconds is knee-jerk reaction, weak-handed knee-jerk reaction. Nobody but weak hands is going to respond to economic report. That's because an economic report is maybe surprising to us or some analysts, but pretty much everybody's already positioned for what their own research suggests it's going to reflect, and their position size is a correlation to the size of their investment ability, and not investment fund, but investment in information. They already know. So I said that the hesitation here is irrelevant to buyers or sellers. It happens to be more irrelevant to buyers because they're not using this, because in that time sellers have since pierced slightly lower lows, but buyers haven't done anything with it, so it's irrelevant to them. I didn't realize so much patience would be called for. I mean, really not a wide first 15-minute range, and we're now into the second half hour and still in it. So the setup that I just demonstrated, comparing the first and second 15-minute windows, is part of a larger setup that now they combine to form a half-hour window that we compare against the next half-hour window. In the same way, so if the second 30 minutes probes beyond either end of the first 15-minute range, maintaining that or retracing that to a specific degree in either direction can be predictive for the rest of the morning. No signal, no problem. If the probe in either direction, or if there is no probe in either direction to even assess, then that doesn't prevent then trying to trend, but it does tell us that trending attempt is going to fail and retrace entirely. So there's not always information either way in a setup. This is one that there is. So, considering the range expansion yesterday, there's some hope in more volatility today. And I mean that in two ways, that there's more of the volatility today, but also more of it. Expansion is expansion. It expands and maybe continues expanding. That doesn't necessarily mean trending. Yesterday was basically a session-long trend. And without one feature, and that is usually that proprietary setup I have will have one timing window that is counter trend. We didn't even have that. A lot of pessimism jammed into the one session. But today might, at the end of the day, looking back, seem like just being range bound. And while we're in it, it might seem like we're just going to be range bound. There's certainly nothing, I just use the word hopeful, as far as the range expanding. There's nothing promising about this price action since the open. But if in fact the second half hour is only overlapping the first half hour, or if there's a probe of fresh lows that may be underway right now that at 10:30 is retraced back into the range, then that won't kill trending attempts. It will, from happen or before they even try, it'll kill trending attempts after they try. It'll let trending be attempted and then call it back home. So, in the end result, we'll still have some pretty good legs to trade. So we don't need trending. We don't need a wide range. We just need the predictability of being able to get in and out and back in close to the extremes so that there's less waste, less price action at either end of the extreme is wasted repositioning. Not us, the market. So everybody's familiar with the Hemingway quote on bankruptcy, how it happened gradually, then all at once. So a lot of setups develop like that. I'm not able to really have a degree of confidence that this is necessarily reinforcements because the 4-minute low to testing the inflection point has continued to be overlapped. If we do get a detached bar that is not overlapping, in other words, the low or a prior low bar, but producing its own low, and that does not develop into some pretty obvious and aggressive downside, that would be suspicious. That would undermine whether or not that was actually reinforcements, and I'd get aggressive on a buy signal. But meanwhile, So long as the 4-minute low, even if it's being probed, is still being overlapped, I don't have that degree of confidence that we're actually attracting reinforcements. However, I'm still willing to be short because this is not, it's definitely not fulfilling any kind of a bullish pattern. And as of 10:15, where are we? Between the bias signals? Okay, no bias. Question 2, was either bias signal tested in the process of finding ourselves at 10:15 between the bias signals? Yes. Therefore, there is offsetting test of the other bias signal in play, the lower red line because of the green line held. Now we're getting detached bars. They're not overlapping, or a detached bar actually, not overlapping one of the first 4-minute bars to have probed the sell signal. So at this point, I need to see aggressive downside behavior persist to continue having a degree of confidence that this is in fact extending. So here's the bias strategy as it is displayed in the blog. We now know the status. As of 10:15, it is no bias. It's no bias because price was still between both signals. But, and we can look at more rules here, it's actually a reverse bias because one of the signals is holding a test, targeting the other signal. That's only in the morning, by the way. And subscribers have full blog access at all times. That's even emailed for free, the blog post. And shortly I'm going to be posting a link, by the way, to a really specially priced deal. You know, this pop-up, this sporadic flash mob kind of pop-up, simulcast live stream. I think in YouTube, it's actually deprecated. The delivery is a little slower. There's maybe a few seconds of latency, but latency anyway that there isn't in the live room. Plus, there's access to the blog. Plus, it's not just a couple of mornings. It's all morning, all afternoon, every day. So I'll be posting a link if you're interested in subscribing. It's going to have special savings of, there's usually a $200 charge for the Vidi room, this room, for this portion of the subscription. The rest is just the blog and email alerts. And usually that's discounted that is actually provided for free for the first term, for the first 4 weeks. But I'm providing that free for the first 3 terms. So I'll make that link available soon. If you have to leave and I haven't made it available yet, send me an email. Or email me a send, I don't care. So, fresh lows, there's a retest of the low. Presumably, we're attracted to the bias down target. That is the requirement because the bias up signal held a test. And so even before we get to 10:30, this is really, you're going to get to see a rarity here. Here's another feature to the bias. So we just triggered a bias signal cleanly at 10:15. At 10:15, we weren't overlapping a bias signal. Bias up signal held its test, putting into play an offsetting test of the bias down signal, right? By the way, if we were still testing a bias signal within 3 minutes of 10:15, that would actually invoke a grace period. And guess what we just did? Within 3 minutes of 10:15, we got in a test of the bias down signal. The bias up signal is irrelevant right now. We're now in the process of testing the bias down signal. The bias down signal was touched in time to invoke the grace period. Rather than 10:15 triggering, we've just overridden the 10:15 signal for a grace period through 10:30. 10:30's disposition of the bias down signal is now what will guide the morning. So, first things first, the predictable is done. Predictable, reliable, that's done. It sure looks like at 10:30, unless something substantial happens here to the upside, which if something substantial to the upside is going to happen, this is the spot for it to happen from. But unless something substantial happens to recover this first half hour's range, the 10:30 print is threatening to be below it. And that's going to keep pressure. That's going to continue to inhibit buyers. But, which may be moot. I mean, we may go ahead and trigger a late bias down anyway. Bounce limit is 40.88. Now the bounce limit is, notice it's just a short horizontal line. It's a lot like this short horizontal line in this one. It's just a different color. Green, it can be red. Later today, I'm sure we'll see some red. It's a reaction limit. This red one's irrelevant. It's not involved right now, but the green one is the bounce limit. It's a reaction limit. It's a bounce limit in this context. Just like the sell signal, it establishes a 4-minute extreme to being tested. Minimum 4 ticks starts the countdown on 4 minutes to identify the price extreme. That price extreme reflects weak-handed, potentially weak-handed sponsorship. So that sell signal, willing to give it a benefit of the doubt, but if it didn't exceed until it exceeded its 4-minute extreme, we wouldn't have had any further reason to suspect it was anything more than weak-handed sponsorship. Once it starts exceeding that extreme, that's reinforcements. And this is where it gets confusing, is that we don't tack on or subtract X points or ticks from the signal. There's 4 ticks to start a countdown of 4 minutes. That 4-minute range establishes the room for those weak-handed. It's not just weak-handed sponsors. To think, well, those must be pretty strong weak-handed sellers if they were able to produce this deep of a dip versus those weak-handed sellers at a shallower test. Well, no, those could be very strong, patient buyers letting those sellers have more room. So that's irrelevant. What's relevant is the price that develops in those first 4 minutes. And that's been exceeded after those first 4 minutes by reinforcements, and here they've gone on to be productive, in fact rewarded, because they held the test to the bias up signal, and the reward is an offsetting test to the bias down signal. And along the way, I mean, we can wait for 10:15 to take a position if you want, or there's all these other observations that we make along the way that give us increasing or decreasing confidence as to whether the bias down or the bias up intends to trigger or not. And we have such an instance now. There's the bias down signal being tested. Because it was touched within 3 minutes of 10:15, the grace period is invoked. All the conversation's been about the bias up signal and its rejection or not, and rewarding its rejection. And all of a sudden, having rewarded its rejection, we're actually rewarding it in time for these sellers to earn a grace period that maybe something was delaying them. They got held up. The waiter didn't bring the bill for breakfast, so they were late getting here, and now they want to take control. We give them a little grace period. They made it just in time. I will say that that usually, or more often than not, this is still going to hold. Where were these sellers earlier? Yeah, they made it just in time to invoke the grace period, but burden of proof is still very much on them. So at 40.86, they're still overlapping the bias down signal. At 10.30, under the bias down signal, not just printing under the bias down signal, but a detached bar, preferably decisively. Stops can be tightened at 10.30 if bias down triggers late, because there shouldn't be, and at that point, any further grace period, any further corrective behavior before fulfilling that late signal, unless it were not actually a signal. So we're testing 40.86, testing it down to 40.83. Bounce limit is 40.87. So that means 40.87 has to start being probed. And now it's 40.86. 40.86 has to start being probed and be probed for 3 or 4 minutes. Kind of shifting to 3 minutes. The 4 minutes, 4 ticks, that's really for the open's volatility. Intraday, 3 minutes, 3 ticks. And we're dealing with a herd mentality. We're dealing with mass psychology with a lot of people. So I think 3 to 4 minutes is pretty precise considering. But I still want to gravitate more or err more toward 3 minutes than 4 minutes after the first hour. So if 40.86's bias down signal is even, if it's even probed back above, as a bounce limit, I should say, not as the bias down signal, sorry. Now, going forward, back above 40.86, still needs to probe it for 3 minutes just to establish counter-trend sponsorships, attention span, and then exceed it by reinforcements. And otherwise, so long as we're not even touching 40.86, I'm going to assume it's being triggered. Now, there is another level here, just more of the Fibonacci scheme from the headline reaction yesterday, being satisfied and being influential, by the way. That's at 81.50. So again, another opportunity to snap back up because that is a relevant level. And if at 10.30, 40.86 is being overlapped, even if it's only being overlapped a little, or even if it was just overlapped a lot and then retraced at 10.30, just back under it, that won't qualify. That won't satisfy what the grace period has been opened for. But sellers are getting every benefit of the doubt. So this answers a big question that we were discussing earlier, as early as the trading plan, the planner session. And that is whether the open could already reject yesterday's decline by recovering not only 41.12, but be on its way to 41.22 and higher. Or if we were going to get an opening thrust, post-open thrust actually, that tests yesterday's lows aggressively during the first 15 minutes, and whether those first 15 minutes already started reversing up or from that point on trap those sellers. Neither one of those setups developed, and so sellers are getting every benefit of the doubt. And just a little spoiler alert. That spoiled it. This projection, this is the mass psychology. Fibonacci's assumption of the masses, the herd that was involved in the knee-jerk reaction to yesterday's headline that drove us lower than 4122's test. This is what they're inferring from that. No, they're not inferring. This is what's being inferred from that swing. The degree of that swing, the shallowness, or whatever the height of its corrective bounce. The velocity with which its projection is being met and influential. So long as they continue to be influential, then they also continue to suggest here's how low we can go, or they are attractions if that remains influential. But here we are at 1030, separate from that I just described. Overlapping 4086 at 1030 to 1030 bar. So the 1030 bar is not detached from, let alone decisively probing under 4086. The usual seems to be happening, and that is that when the bias, offsetting test of the bias signal is actually satisfied in time to invoke a grace period for testing it. In other words, that has to have happened after a post-open test of the bias up signal, the offsetting test. We can't open at the bias down signal and do this. We have to have expended all this selling pressure. There has to have been all this defense against the bias up signal. When that happens, when this setup happens, usually that's going to hold. So, and this was a relevant level, not only the bias signal itself, but actually the next Fibonacci projection of the headline reaction. So the predictable was already done at 4086, a little bit excess there. Is this reversing up? Maybe, maybe not, because we have a bounce limit test that's allowed 3 minutes. I'm going to allow 3 minutes to identify the 3-minute extreme to testing it. Why? Because anything higher than that, that's where the reinforcements arrive. At 3 minutes, there's still going to be potential to retest the low. And as I described yesterday, I'm giving every trend, I give that. That's the default. I give it a benefit of the doubt that it is going to retest the low or the extreme. Every bounce gets a benefit of the doubt. The trend is your friend until the end, until disproved otherwise. It's at least an attraction. So if I can get short very close to where I know it's wrong to be short, not with any greater likelihood of the short playing out, paying off, just being so close to where potentially this is just weak-handed counter-trend sponsorship. The closer I can get into that minor loss, that small loss, the more potential reward versus that small loss. I don't have to be any likelier for that to play out. It just has to be a general rule of thumb. I don't need any further edge like, well, there is no further edge. Like, this is the first reaction up from the previous trend's extreme. That has a horrible track record of triggering a reversal signal. So I'm already anticipating at some point this leg's going to retrace at least 61.8%. Well, let's say I'm confident that only in 4084 or 475 being met. And I can get off a short here at the 3-minute high. Where was I when I was busy talking? 4090. With 4091 basically being a stop. It's too tight. I can give it a point or two buffer, room for noise on a sell at 4090. Call it 4092, 250. 2-3-point stop on a 4090 entry. Am I looking for 2 or 3 times that just to get back down to 84? Yeah. And the potential not only to retest the low, but to resume the decline. This is not a bias down window, but let's add one more layer of complexity here. I'm trying to unfold this or reveal it gradually. At 10:30, we were actually overlapping 4086, the bias down signal, that we were overlapping within 3 minutes of 10:15. So notice I haven't actually said, well, so here's what the bias is. Well, the bias is actually, it's not a bias down. It's too late to trigger bias down. In fact, it wasn't being triggered at 10:30. It's not a no bias. It's not a no bias. It was a no bias. You'd think it's a no bias. We're trading between the bias signals. But actually, because the grace period was invoked within 3 minutes of 10:15, and again at 10:30, we were still overlapping 1086. This is a non-bias. It's a non-bias, which means the bias signals, otherwise, if this were a no bias, the bias down signal would be required to hold as support for the next hour. It's not a no bias, so it doesn't have to hold as support. So I can look at sell signals, in other words. I can at least not be limited to a retest of the low or just to testing the bias down signal. I can make an assumption or at least anticipate that a fresh low can extend. All right, I want to get something going here. And this is why you want to immerse yourself in the vidi room, because I'm just not able to go through all the facets surrounding every decision in real time. Cumulatively, get the continued exposure in the real-time market lets you do that. All right, so 1 or 2 point buffer on room for noise above 40.91, 90.75's 3-minute high. Anything higher, at the very latest, above more than 2 points out above that, I want to be long. All the unfinished business below, all the attractions below have held. They're neutralized and they've held. So at least I want to consider no later than 40.93, I want to be able to consider a long. Do I want to take a long? I'm at least identifying here's how much room there is for buying pressure before it starts even suggesting momentum is reversing up. I don't really want to take a long at 40.93 when just several minutes ago we were at 82. Not only were we at 82, that was the trend extreme, and this is the first reaction from the trend extreme. This leg has a horrible track record of triggering a reversal signal. So even if I knew with 100% certainty that 40.93 were going to be exceeded and no new low is going to probe, I still wouldn't have any degree of confidence. I'd bet that we're probably going to back and fill first. That's what I'm looking for, is trading the back and fill. So selling the strength of the 3-minute high, the usual attention span of counter trend sponsorship, weak-handed counter trend sponsorship. It's getting a little bigger lift here because it's coming from a relevant level, because 40.86 missed its opportunity to renew the bias down or to actually trigger bias down. Now that we're hesitating here, basing basically, it's not a 61.8 retracement, but I have a higher degree of confidence in a buy signal if it triggers. We're creating a new mass, and it has its room for noise. And if we start breaking free from it in either direction, it's going to be likely to extend. I'm not getting married to a bottom having suddenly developed, but to some sort of a bounce. Now, I can also start assuming, so long as 93 isn't probed, that back under 88 starts resuming the decline. If we're going to retrace to 84.75, we have to break under 88. And by the way, breaking under 88, we're probably going to touch 84.75. That is not what this is about. We're not looking for trades of 2.5 points, 3.5 points. But there's an attraction, a minimum attraction I know that has potential to develop into retesting the low, let alone resuming the decline. I know this is a non-bias window, not a no bias, so the bias down signal isn't required to define its lower end. And I know we just put in a pretty aggressive corrective bounce. So, yeah, I'm willing to get whipsawed out of 88, a short under 88. Even more so because I think there's going to be at least, even if I'm whipsawed out, there will be first at least a dip to 85. So if I'm trailing a stop, that's going to limit the pain. All right, any questions, please post. Here's that special savings offer. This is 3 free vidiroom terms. Normally there's only 2. Oh, I'm sorry, normally there's only 1. And each is otherwise $200. So at the end of the first 3 terms, you'll get the vidiroom access, where normally you'd only get it for 1 term. I mean, it behooves me for you to have it because it helps your learning curve. But if you were just exposed to it and you can see the specificity and accuracy of the levels helping you, the timing or the ongoing narrative of what price action is doing and why, and this is really, we looked at yesterday's headline reaction to see how that plays out as well, how that can be extrapolated out to know the context, know the roadmap, know a destination. That's so much of the battle. But then also there's so much more that I haven't even been able to address because we don't see the price action here that allows me to. The 10-10-30 setup, which isn't actually playing today, but it is keeping us bearish. I'm about to get a lot less bullish. Sorry, I wondered. So, anyway, if you like that, beyond today, this is just 2 days, yesterday and today, and it's not even days, it's mornings only, of sharing the vidiroom screen and just through YouTube, so there's some delay, some latency if you want it real time actually. And every day, all day, that's a pretty good entry to do it. If you went to the site, it would be a free first week, and then, as I said, a free first term to the video room, but you still pay for the blog anyway. And then after that, it is video room all the way, being charged. So you can cancel anytime. Anyway, any questions about the offer, please go ahead and post them here. Any questions about the service, what it entails? I showed the blog momentarily, but there is complete blog access, and blog posts can be emailed, no charge. They go out simultaneously as I upload them to the blog. They're sent. They're basically an after action, and then anticipating if this happens, then that. Really, really useful to make sure you're getting the understanding. And as a reference, the blog itself is a reference. The blog itself, we're building out and about to launch a knowledge base of all the setups. So they're right there at your fingertips. And you can see historical occurrences of them. And see if there's any analog to, I'm here to throw out the label. In a fast-moving market, I'm only able to describe so much as far as execution choices and behaviors to look for in real time, but you could certainly spend all the time you want in the glossary knowledge base. And then some other things come with that. Free coaching call. Live access to the recordings as they're being made. That's a good question. How long does it take a typical trader to learn the system? So there's, it's kind of like golf. And I don't mean to dissuade you. There's a lot of facets to it. So what I do is teach it in a way that you focus on one module or one element at a time that's built on in the next. And let me explain what a module is so it doesn't sound overwhelming. One module would be understanding the inflection point. The 3 or 4 minutes of probing it to establish the extreme of its test and where reinforcements would arrive and where it would be invalidated. And that's it. That's module 1. Module 2, just based on that understanding, what are some trading tactics? What are some of the actionable choices that I can make right now based on that information and price action potentially triggering that signal? That's module number 2. Module 3 comes back to that and starts looking at other developments that can happen along the way. So as an example, here's yesterday afternoon. Just looking again at yesterday afternoon, there's an entry. See if we get something like that on a 3-minute test of a bounce limit. Totally different entry choice than just breaking this, but an opportunity to scale in. These are the kinds of patterns when these develop that make your week or even your month in an afternoon. So that would be a module, getting a little more in depth on that, and then coming back as another module, what are the trading choices on that, and so on. That's it. Then there's if you know that, you know how to, within a week, how to navigate in the video room and what kind of choices to make. And from then on, it's a function of the market, which of course has so many different behaviors itself. Like, it's very rare. What we just saw, where the bias up signal was held and put into play an offsetting test of the bias down signal, it is very rare that that test will then go on to be met in time to put into play the bias down signal. But that's what I'm here for, is then to tell you, okay, so when that happens, and what the glossary is there for you to see as well, the historical occurrences of that, what happens? Well, here's one that's going to go in the catalog. Usually it holds. So that's the bias parameters, and that's another system. We just started on a different learning path. You don't even need to know that to be able to function in the viditrade. So, are these little bars entry points? The blue, brief blue lines with an arrow up or down is a buy or a sell signal. Whether you actually or any two people act on it, consider it actionable, is up to yourself, and that's another module. We go over trading plans, how to define your own risk tolerance, how to identify different trade selection. You're not going to want every trade. Every one of these signals you're not going to want to take. And by the way, when a signal is being triggered, you're not necessarily going to want to act immediately. Your system, your own trading plan may be to wait for that 4-minute low or 3-minute low to be decided, and then manage your entry based on that. But that is where the chart is saying there is something happening, like a buy or sell developing. And then here's a risk-reward cheat sheet on the right. And we keep coming back to this. This is basically what we refer to as you go through the training. There's initially a week's worth of videos that are delivered to you, and then workshops that we go through on an ongoing basis. And then, of course, my discussion as you're immersed in seeing it. There's nothing like being immersed in real time, seeing the price action as I'm describing it. You can go back and watch videos. I don't want the videos to supplant the experience. It's just impossible. The experience of price action moving, not knowing the next bar. If you're able to see this signal right now and see how it played out, you don't really have the experience of waiting for it, of knowing the patience you had to expend. And patience is an expense. So that's very important, to be able to marry the experience to the actual module. So easily within a week, you know whether it's something you can be functional with. But you won't know it all. To answer your question with a feature-length movie. All right. So I'm going to get this into the blog. Subscribers get access to the blog, and then they'll get that mailed to them, and then it'll describe here's what happened and why, and make sure that we're all on the same page and understanding, because that's part of the understanding process. And if I understand there's people here who have no interest in learning the system. They want to see the signals, and they only want the degree of understanding to know how the signal can be executed on. So for instance, do I take seriously that there is a signal being probed here? Well, it has been probed. It's 4093. It's been probed by at least 3 ticks. So the countdown is on. As soon as I know where the 3-minute high is to testing this signal, I'll know how much higher will tell me its reinforcements arriving. Or is this just the usual attention span of weak-handed counter-trend sponsorship? Since I don't know the answer to that yet, I want to be prepared to sell it. This tick here, this didn't even qualify. It definitely touched this relevant support, but it didn't even start the clock ticking. Now that the clock is ticking on a signal, in this case on a buy signal, it's allowed 3 minutes of counter-trend detouring. These bars that are detouring under the buy signal are disqualified from triggering a sell signal. Let's say we're in the first 2 minutes since first starting the clock ticking on the buy signal. and suddenly a big down bar develops, it is disqualified from triggering a sell. And that's for our own protection, by the way, because that's the usual attention span of counter trend sponsorship. We don't have any reason to give it any bigger benefit of the doubt. Sometimes it develops into something more substantial, but usually it doesn't, and so that's how I shape my decisions ahead of time, based on what usually happens, not based on what might happen and leave me behind every now and then. We also have, well, that's really it. It's a non-bias window, but kind of behaving like a no bias. Usually what's usual? Usually a non-bias where a bias signal was being tested not only at 10:15 or within 3 minutes to invoke the grace period, but also at 10:30, so that the grace period wasn't even utilized. Hang on 1 second. So I can tell you, though, historically, that's going to behave like a no bias anyway. Be prepared. I mean, if we've got a sell signal and we've got a distributed pattern that says lower lows, that's not a deal killer, because that can still extend. All right. Something else that subscribers get is they can request a chart analysis at any time on anything. And I'll just apply the methodology. On Saturdays, we do an extended presentation where we can also incorporate a lot of teaching. But right now, just a real quick analysis. Question on Tesla: do I expect a sharp bounce if Tesla gets to 151, or a more drawn-out process for a bottom? All right, so Tesla, I am looking for 151. I've been looking for 151 as an eventual magnet. Interference at 160 came into play ahead of earnings. We were definitely looking for 160s or 150s. There was potential for a bounce from 160. Didn't develop. Instead, the pattern has extended down. And 151 is in play. So the question is, should it be a sharp bounce? It's actually the other way around. If it's a sharp bounce, that's going to tell me it's probably temporary. We can get a sharp, or at least that we're not actually yet reversing up. A sharp bounce anywhere in this area is probably going to hold these higher prior lows around 160 and continue bottoming. This is the bullish scenario. And then launch a recovery. That's the bullish scenario. A steep bounce that reacts immediately and reacts, that's not a durable bottom. Not at this stage. Okay, so back to ES, which is probing its buy signal. More than 4 minutes out, we've got a higher high, a sentiment extreme, but a higher high. You know, on the fly, certainly we're not bound to do anything in any certain way, and we can certainly look at this second test. A more realistic 3 minutes of solid price action, overlapping or probing in any case the buy signal as being our first 3 minutes. And its 3-minute high needs to be exceeded to indicate reinforcements have arrived. If that's the case, then there's still another, since that started developing, we have yet to probe at least 3 ticks under the buy signal, so we have a 3-minute countdown that we'd afford. It gets a little overlappy. It should never be conflicty. Also not words. So this is really the 3-minute low to counter trend detouring back under the buy signal after first piercing it by at least 3 ticks. That's 40.91. So I know I can get aggressive. I can come to within 1 or 2 points on a sell signal, so long as it's not triggered by one of the first bars probing back under the sell signal that's already elapsed. I'm taking seriously any kind of a sell signal. I may get more aggressive here since reinforcements haven't obviously arrived. And I mean, it's not that it should be obvious they haven't arrived. They haven't arrived in obvious fashion. And so, since they aren't, I'm willing to get more aggressive on a sell signal. As in under 89.50. And by the way, at this late stage, if buyers aren't exploiting this, then it's probably because we're heading to fresh lows. So when you're doing your risk reward calculation and you're looking for the reward element, that can be a fresh low. But we do have reinforcements. They are behaving like reinforcements. This is obvious fashion. And the pullback limit is 40.92. Same as the bounce limit, thicker green or red bar. And I'm sorry, bounce limit, the pullback limit is really 40.93. We haven't yet exceeded it high enough for a new pullback limit. But 40.92 is kind of important as well. So these are just inflection points. That's all. Buy, sell, pullback, bounce limit. Question, am I always using Fibonacci's for the pullback limits and inflections or eyeballing it? Well, I'm never just going to eyeball it. I'm definitely data dependent. But there are Fibonacci's. Here's another cheat sheet I call levels. This is the answer to your question. Here are all the different levels calculable. That would be the Fibonacci's. Prior supports and resistance. Landmarks, timing windows, etc. But I will say that nothing can conflict with a Fibonacci projection. And the Fibonacci projection can be used to fine-tune how deeply will a prior support or resistance actually be probed. We can get pretty precise with that. So this is kind of like the headline reaction that I described earlier. And that is that we got a 38.2% retracement. I back out the errant ticks, the sentiment extreme. Didn't get a 61.8, but definitely corrected to some relevant degree to distinguish the next leg from the first reaction up off the previous trend's extreme that itself would have a terrible track record for triggering reversal signal. In this case, we were able to get non-arbitrary pullback, at least 38.2%, built a base so that we're not launching, we're not trying to extend buying pressure from down here, we're just trying to extend it from up here. So that's more credible. So the same, it's actually the same exact principle as with the headline reaction from yesterday. Since we're already producing a fresh high without dipping any deeper than the 38.2, I'm looking for at least the 38.2, probably the 61.8, and we could even extend to more offsets. In fact, if we were to do exactly what the headline reaction so far has done, this is it. This is the 127. We'd be at 41.03. And since clearly this is not, or it should be clear, understand why it is, this is not overlapping the 61.8. This is probing it. 61.8 is not restrictive right now. So we give that a benefit of the doubt. Sometimes it pays off. I have to say it doesn't always pay off. But that's what risk management is for. So we're at 40.9975. Pullback limit is 96.75. Question, am I no longer viewing this as a distributive pattern? And I don't know that I was viewing this as a distributive pattern. I just went through everything I'm viewing this as right now. The turn that's potentially underway. The downside that's been satisfied at its offsetting test. In other words, the target met and held. So we do have a breakout yesterday that a second consecutive lower close today would confirm, if that's the question. Okay, so yeah, we won't know until the close whether today was a second consecutive lower close to confirm yesterday's breakout from a multi-session range. Anything can happen. And if we're just hovering, if this is what it looks like at the close, this is not a confirmation. RSIs are oversold at the low. Simultaneously oversold 1 minute and 3 minute RSIs, or overbought for that matter, require a retest. With exceptions. One of those exceptions is the open, the first hour. So simultaneously overbought, oversold RSIs during the first hour do not require a retest. Or during the noon hour. Or in reaction, those are fixed windows, or in reaction to a headline. That, by definition, is weak-handed sponsorship, producing those overbought, oversold RSIs. All right, so we're still scaling along the Fibonacci scheme. By the way, the bias window, you can see the tape below this, below the x-axis. I have the schedule. That's a fixed window. The AM bias window, morning bias window, starts lapsing at 11:30. 11:30 into noon is the lapse. This is a non-bias, so that really is irrelevant officially. Officially, unofficially. Just because a contingent was strong enough to make that no bias irrelevant doesn't mean we don't still have a contingent in the market that is focused on, as they are every day, on the specific timing windows. They don't know it, but they are. So I would still anticipate that the bias is going to be influential before 11:30. It's not a deal killer if we have a setup that says, this is going to extend. That may be the way to go. 99.75. No, 99.50 is the pullback limit. But the predictable is done. That is, And it's not even predictable at this point. We didn't have to return to the bias up signal. That's like the bias down signal having held a test through 10:15 to put into play an offsetting test of the bias up. And it was just a minute too late to do that with the grace period. That would be satisfied right here, right now.
gifting inspo?
Sorry about that. So we're now actually, let's imagine this is just a no bias window, not a non-bias, where the bias signals don't require defining either end of the window. In fact, I don't usually or always put up the cards. Here's the no bias definition, which it almost was. Here's the non-bias definition, which it is. Sort of, because we're now within 10 or 15 minutes of the bias window lapsing. So if this were a no bias window whose bias up signal would be required to define its upper end, well, we're within 10 or 15 minutes of the window lapsing, so that's no longer a requirement. Not a deal killer for extending higher. It's being probed right now. If it were being probed like this earlier, that would be no bias trending that would require being retraced. And that's in a no bias window. This is actually a non-bias because the bias, even though it invoked the grace period, didn't go on to use that grace period. Pullback limit is 4103. So this is, in other words, free to extend. All right, so we know we're coming out of the bias window. The bias window is basically within view of lapsing for all intents and purposes. It's a non-bias, so the bias signal isn't required to define either end of the window, but the timing is still the timing. And the timing is mentality. It's a attention span, and that attention span, whatever the attention span, whatever contingent or sponsorship was most heavily influenced or diffusing the otherwise equally shared influence. All those influences, they're now within view of lapsing because the noon hour is approaching, and it's a very real window, very real effect on people's schedules. This pre-open bounce may have been nothing more than refueling sellers to probe lower, and this post-open bounce can be the same. I'll still give its break a benefit of the doubt if it can be maintained. But just keep in mind, we may be talking about this having refueled sellers. Which, by the way, at the moment would start to be signaled under 96.50. So under 96.50, I'm going to give sellers every benefit of the doubt. Preferably be able to raise the sell signal by then. Preferably some sort of consolidation by then. Because just suddenly dropping from there or from here to there won't be very attractive. So, for instance, the pullback limit being tested. We're 2 minutes in. When we know the 3rd minute low, I might be able to raise the sell signal on that. When we know where the 3-minute low is, detesting the pullback limit, I'm also going to be looking at a potential buy signal or a long entry, no signal, just a tactic that takes advantage of the pullback limits test, knowing that the usual attention span of counter-trend sponsorship, weak-handed counter-trend sponsorship, is 3 minutes about. When I know where the 3-minute low is, if I can get in short near it, I don't need any greater reason to expect extending higher other than the trend is my friend and to stop. I'm going to be a little more conservative or less aggressive and look at 4104's recovery as an inflection. But this is, just to know where the inflection is. I want to see 4104. If I'm long still or re-entering long down here, knowing that I'm so close to where I know it's wrong to be long, say under 4100, then I am going to want to be aggressive as possible in that case. There's 99.50. Be right back. By the way, once again, there's no patience, etc. There's no burden of proof on a timing element. But we do want to see, in the case of a pullback limit, as opposed to an initial buy or sell signal, we do want to see, if possible, some quicker resolution. So this is a test of a buy signal. They had two inflection points. We had an inflection point also down here at 99.50, and it was touched. I mean, it was pierced by a tick, never pierced by minimum 3 ticks to even start a countdown. We do have a countdown going on the buy signal, and the buy signal has been probed here for a little over 4 minutes, but not until a couple minutes ago, or 3 minutes ago actually, did it finally probe by at least 3 ticks to start the 3-minute countdown. And we know what the 3-minute high is. The 3-minute high is about 675, so 4107. 4107, now that 3 minutes have elapsed, and that's the high of those 3 minutes. Anything higher is reinforcements. And we would expect to see reinforcements behave like reinforcements if they are reinforcements. Maybe they're not reinforcements. Maybe they're the not reinforcements. Anyway, some traders are going to already have a buy stop triggered. Some are going to be monitoring this 3-minute high and maybe trying to get in closer to the inflection, or looking for one of those opportunities where sometimes, here's a buy signal that's pierced but consolidated a little before then actually probing and extending. Here's one that's fluctuated around. Maybe this test will be more like the one this morning, and we'll just fluctuate around it, and this 4104 buy signal might be buyable around 4103, 4102. Really close to where we'd know it's wrong to be long. All right, I'm going to leave the room open a little bit, the simulcast. We have some new bias parameters coming out for the afternoon. They're based on patterns through noon, and actually, to be precise, through the time that we get to within 3 minutes of noon. But I will leave the room open for a little bit. Remember, and if you lose that link, by the way, to subscribe, just email me and I can get it to you. Whatever you do, by the way, whatever you do, thank you for trying this out. Do that like thing. I think that's supposed to be a good thing for me. Subscribe to the channel if you're not subscribing now to the product, to the paid service. Then subscribe to the channel and you'll be notified when this room opens again. I'm going to try and squeeze one in before Memorial Day. So sometime in May we'll try and do one. 1 or 2 days again. But if you want ongoing, every day, all day, the most attractively priced way I've offered in a long time is in that link. And I hope to see you soon. Take care. All right, so we are into the noon hour. I'm going to be ending the stream here. Again, if there's any questions about about any of the terms, anything else, definitely let me know. There it is. Okay. I think that's it. All right, everyone. Thanks for joining us.